And here we go. I hope everybody's doing very well. This is Travis Witherspoon, and we are live from Carter Capital. Trade with Travis on YouTube. And also Trade with Travis on Instagram. I'm going to end up posting a video up on Instagram a little bit later on. Let's go ahead and go through the disclaimer. I'm not a CTA, so I'm not going to tell you whether to buy or sell. What I'm going to do is teach you education. And from the education, you can be able to make your own informed decision. I understand that Forex trading involves risk. It involves risk of being able to make money. Also involves risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you can end up making money today. So with that being said, show myself onto the screen. I hope everybody is doing very well. I see myself on, I think I'm going to show myself on Facebook first. Showed up on YouTube first. Instagram and YouTube. How you doing? This is another episode of Trade with Travis. I'm looking at Facebook. Facebook is lagging in, but it's on the way when it comes down to that. Hopefully everybody's doing very well on this Wednesday morning. We did not have a session yesterday. I had to take care of some stuff, my boys, so I wasn't able to necessarily do that. But for the people that are actually here, thank you for being able to hop on. If you're new here, once again, make sure that you end up subscribing to CarterCalCapital.com. Go click on Start Here, be able to hop in one of our free webinars, or if you want to hop into our next boot camp, is going to be December 14th to December 18th. Typically, we end up doing it at the end of the month, but I'm definitely not going to end up doing it during Christmas week. First off, there's not. Obviously, want to be able to hang out with my family and everybody else, and I know everybody wants to be able to do that, so we're going to end up doing that overall. And also, it'll give you a chance to be able to fully think about trading and get all that stuff done. This is probably one of the best Christmas presents that you can be able to give anyone, because you're basically teaching them to be able to invest in themselves. Now, I'm gonna put you on to a little bit of a secret. December has been probably one of the best months that I've had, at least starting off for overall trading. It's only been 3 days in. Excuse me for the sneeze. And the reason why is because of some of the new strategies that we're putting together. And I'm very excited to start talking about these. I'm going to end up doing a pop-up sometime at the end of this month. And it's going to end up being only towards the people that's in my Carter Capital, Carter Cal Academy trading group. If you're interested in being able to do that, please make sure that you end up looking out for some of the stuff that I'm going to end up placing in. It's going to end up being on hedging and advanced hedging strategy that we're going to end up using for the indices market. Obviously, my masterclass students gets it first, but if you're interested, you can be able to hop in and be able to get that as well. So let's go ahead and take a look at the charts and see what's going to happen yesterday, and let's see what's going in for today. So yesterday, or Tuesday, was the biggest day when it came down to overall movement. We talked about how it was going to end up probably being the strongest day aside from Friday for its overall movement because of what's happening with non-farm payroll. That's going to end up happening on Friday, but we end up getting a lot of GDP information end up happening today. Swiss franc ended up doing very well. The Eurozone actually ended up doing very well. The Eurozone has actually done popped over 121. So that means that we're looking at being able to see this market go up to 124, going back to 2018 highs. We end up seeing the Australian dollar end up having its GDP, and we end up saying that more than likely it wasn't going to change anything for the overall number. So we should look at a overall uptrend when it came down to that movement. Now, going into today, what we're going to end up seeing, and some of this stuff has already happened. We're going to end up seeing Governor Orr end up speaking for the New Zealand dollar. We're going to end up talking about retail sales for the Germany in general, and I think most of this news has already went out. Well, hold on, today's Thursday. Jeez. Sorry about that. So today, think about this. So if we have non-farm payroll going into tomorrow, we're probably going to end up looking at this day being pretty slow. Now, overall, this day is considered to be a fundamentals day because we have retail sales that end up happening from the Eurozone, which they haven't gave a number, but it's going to end up coming out. We're going to end up seeing something with the ISM services PMI. Anything above 50 is actually good when it comes down to that number. Then after that, we're going to look at retail sales for the Australian dollar. Now, all of this is going to be based off of what happened in November. Now, we should see that November should be somewhat slightly of an uptick, but it probably wouldn't be the greatest uptick as of yet. You'll probably end up seeing retail sales and everything else like that be projected to be high, obviously in December because of all of the stuff that ended up happening in November, and in January because all of the stuff that ended up happening in December. So typically those numbers are very much important when you start taking a look at it. All right, so let's get into what's happening. U.S. dollar index. We've been talking about how this market was basically bearish, and we said that it's going to end up going to a long-term de-extension at 11,564. So that meant that you should be looking at selling on the dollar. And anything that you end up doing, you just want to make sure that you end up selling on the dollar because everyone else is basically selling on the dollar at this particular point. And nothing has changed when it comes down to this. It's finally done broke the B with overall force. What we should be looking at is the market going down to 11,565 for its overall move. We ended up talking about this about 2 weeks ago and said that we were probably going to end up saying that this market was going to end up giving us a little high price, giving us another high price, and giving us a little like a little wave when it came down to the stochastic before it actually ended up hitting the extension. I do think that we're probably going to see some overall days where the market is really going to end up breaking pretty big and being able to have a huge movement toward the downside, but there's not a lot of buyers that's going to end up being in this position. So this is where you're going to end up making some of your explosive moves, being able to go against the dollar for its overall position. And so we're going to end up paying attention to that, see if we can find some opportunities for that in our manual trading account. Also, we take a look at oil. Oil is basically pushing up bullish. The market has broken out of this overall consolidation path. The market is moving towards the overall buy zone. Currently it's at 42%. Would love to be able to see if we can get it inside of the buy zone from there. Looking for counter trend line breaks. Once we end up getting a counter trend line break bullish, then after that, we'll look for an opportunity of being able to get in. Now, we're not going to look at it from a daily perspective on being able to get in. We want to see that the daily gets into, we want to see that the market gets into the daily stochastic zone of right around 10%. But if it ends up hitting $43 or pushing down to $43, then that's the overall opportunity that we want to look at being able to get in at. I think that will give you the greatest value that you can be able to get, that will turn past resistance into future support. And then after that, look at being able to buy from there. So keep that in mind. I'm looking at being able to buy any type of position that will allow me to be able to go up long term. In this position, what we're looking for right now, we're looking to be able to see if we can get to $50 a barrel, $51 a barrel. And then after that, if we can be able to break out of $51 a barrel, then obviously we're going to push back up to mid-November highs at $64 a barrel. So this market is bullish. I would not look at being able to sell. I will only look at buying opportunities for us being able to get in this market. Gold has skyrocketed back up. It's done had a lot of strong days for its overall movement. I wish my EA would have caught it. I put it to you like this. I wish I would have set up my EA to wheels just only buys instead of being able to have a mixture of buys and sales. My buys have already been taken in and cashed in. And right now what's happening is that my sales are taking a little bit of a hit because of what's happening right now. Currently, the market is at 35%. Overall, this market is still considered to be down. Overall, the market fall area is at 1731. The question is it ever going to end up hitting at the extension for it moving toward the downside? That's something that we have to really pay attention to. What's the next level where the market can be able to go to? Well, if we're looking at this for its overall bullish movement and you have not got into it, anywhere around 1850 will probably end up being a position that I will look at being able to buy to, just being able to look at overall support. Now, I know there's scalping the market and seeing where the market can be able to go, but essentially you could be able to make a little bit of a bag right here from this overall movement to 1850. But you're looking at being able to sell in this overall position. I would not look at selling right now until the market ends up hitting this past past support, and hopefully it turns into future resistance and falls down to the sell zone. Currently, the market is in the no trade zone. If you don't feel comfortable trading it at this particular point, don't look at trading it, especially off of a daily position. If you're trying to swing trade it, it's not a smart decision right now. What I would say is, if you're trying to look at any type of thing to be able to do, I will focus in on being able to sell a little bit shorter term, and then after that being able to buy. We wanted the market to be able to fall down to 1810 for the people that have been using the quant system to be able to drop down. It only dropped down to 8. We wanted to see if we can get it back to 1800. It never dropped down to that overall area. We're still looking for the market to have a little bit of a fall. We probably won't get that unless we get vaccination news or we get stimulus talk news, and both of them doesn't look like it's going to end up coming down the pipe anytime soon. So you have to protect your positions. You have to remain to be patient, and you have to understand that you probably might see a little bit of red unless you end up getting into all buys. You got an all buys, and quite frankly, keep on riding it up probably to right around that 1850 area before looking to be able to do anything else. Silver is pretty much doing the same thing. Silver is popping up to the upside. It's done broke this counter trend line break. It's obviously in the R3 zone at this particular point. Silver is pushing, trying to get back to $25 a barrel. $25 per ounce when it comes down to this one. The market fell all the way down to 22 on Friday. well, on before the new day, before December. So we're talking about November 30th, and then after that, rocket ship back up, and quite frankly, didn't have a chance to be able to get into it. But for the people that did, congratulations on that move. Let's take a look at let's look at the indices real quick and kind of get an idea about what's going on with them. XPX 500 is basically moving into an overall push zone. The weekly D extension is expected to go to 40,089. Now these are basically new highs right now. Once it ends up breaking past 3774. Currently, right now, the market is at 3771. If the market ends up breaking past that zone, then we should see that this market will start to really kind of push towards this overall zone. So that's the weekly. The weekly is still considered to be up, even though we're getting close into the sell zone. And so we got to be cautious about that. The daily at this particular point has been continually moving upwards. And we're trying to get to 3760 for the overall zone for us being able to get in long term for this position. We just have to maintain and manage how this market is actually moving from this overall spot. From a 2-hour perspective, we can see that this market has been basically consolidating towards the zone, and I think the reason why the market is basically consolidating is because, one, there's no news, and we're still looking for what's going to end up happening with stimulus talk or anything else like that, and because it's a little bit early right now. Remember, even yesterday we ended up having a little bit of a drop. I think that the market may end up dropping down to 3652, giving you a chance to be able to get back in for its buying. If you have not bought yet, what's the overall case of being able to get in? Well, one, we're at all-time highs. Two, if we're looking at volume profile, if we get past 3680, has not been no previous data of people looking at being able to sell in that area. Well, people know that when it comes down to market makers and everything else like that. People that are selling have their stop loss up in that area. If this market ends up breaking this overall area with a little bit of force towards the top side, then after that, you're talking about this market going to end up moving solidly into the overall D extension for the daily move. And then after that, looking at being able to push up from there. So what am I looking for? I'm looking for the market to be able to go down to the buy zone. We can be able to get the market in the buy zone with a overall counter trend line break towards the overall upside. Then you're good to go for being able to trade that. If you have not traded it yet, I would not jump in until that actually happens for its overall movement. Let's take a look at the NAS 100. NAS 100 once again has broken new highs. It's went into a all-time high at this particular point. Currently, when it broke 12,500 yesterday, that was a new all-time high. The market is expected to go to 1398 first, and then after that, start to push up. Now, if I'm looking at this overall position, I really want to pay attention to 12,745 as well. The reason why I want to pay attention to 12,745 is because if we look at the sub field to the upside, and because we know that the market is in a sell zone, we see that this market ended up doing an A, B, C, D drop. It ended up falling to an area to where it would somewhat gravitate towards 12,745. Now, I have my D extension at 13,098, and I would love to be able to get all of that position, but I want everyone to be able to understand that this may end up being the area where the market will end up stopping for the first initial move, then after that falling down to overall support again, and then after that trying to push back up. So if it starts to halt at 12,745, then after that I'm going to look to be able to get out, take my positions, and then after that look to be able to find a short position to be able to go from there, at least short term. But long term, we're still expecting that the market is going to end up pushing up. So the best move in this case on any type of move would be buying. Okay, so I wouldn't necessarily be jumping in to sell unless you're selling to the actual small supports and scalping the market. If we can get a huge push today, going into non-farm payroll, then we can see what's going to happen if this market ends up pushing up to 12,750 and being able to go from there. So I'm excited about that overall move. Let's take a look at US 30. US 30 is expected to keep on pushing up. Once again, this is an all-time high. We're looking for the market to be able to start pushing up to 30,479 for its overall D extension. Right now, the market has been trying to push. It's basically in the no trade zone, and we don't necessarily have that much momentum as we thought we did for this overall movement. But we do have a counter trend line break. The market, if it does break this high, it's going to end up pushing up with this with relative ease, and then after that, we'll see what happens from there. But overall, all of my trades are going towards this overall position for us being able to buy at 30,479. I'm not looking at being able to sell unless I'm selling short-term positions to be able to scout the market, to be able to go from there. Currently, the market right now on a 2-hour position is still moving down towards the, it's still waving down slightly. We don't have any momentum right now. Now, the question is, why do we not have any momentum? Is that because basically 9:30 is when the market opens up and we haven't seen any buyers or sellers hop in, at least early during the London session? That may end up being the case. Is it because that we're seeing that non-farm payroll is going to end up coming out tomorrow? That could very much be the case. So we might see a little bit of a drop. If it drops down to 12,660 and puts you in the buy zone and you can be able to get in at that particular price, I will look at being able to buy. Obviously, this is the same type of move that we're looking at. The same type of move that we're looking at with the US 30 and NAS 100 for its overall positions. Okay. Now let's take a look at the currency strength meter real quick. We got about 9 minutes, so we can be able to get through all of the US based pairs. Currently, right now, we can see that the pound has absolutely exploded. I don't know why, but the pound has absolutely exploded towards the overall upside. And this is the third time that I have not placed in any type of trades on the pound and watch this thing move up that much. Jeez. Okay. I know Chase is actually very happy about that. That's a pair that he ends up trading a lot. So we're pretty much out of that position right now. Not necessarily making anything off of that position. So it's not necessarily the greatest thing to look at least from a buyer's perspective. But overall, if we're looking at that position, we just have to keep in mind what's the overall underlying movement from there. So with that being said, let's go ahead and take a look at the US based pairs. I think there's no reason to look at the pound United States dollar because I think that move is already over with. If we would have caught that a little bit lower, then we would have been good. I want to start off with the euro versus United States dollar and see where we're at on this one. Euro United States dollar. What do we see? We have a market. We had a retracement. We had a breakout. We had a breakout of 1.19, a retest, and then after that, a full explosive breakout. We talk about this all the time. What's its overall movement? What does this mean? The market is fully bullish. What does that also mean? The market is planning to be able to go up to 1.23, which is the overall point of control area, all the way up to 1.2365. We ended up placing in a lot of trades in this overall position. We didn't maintain those. We just got out at 1.19. I kept my eyes off of this one. So obviously, I wish I would have got into it. My EA didn't even trade it for some reason. And for that reason, I have not got into the market as of yet either. So we take a look at this from a 2-hour. What is the plan? Is there anything to be able to do at this particular point? Well, the answer to that from a smart trading perspective is right now nothing. We can see that this market has went through 1, 2, 3, 4, 5, 6 different waves right now at this particular point. The next D extension is expected to be at 1.2229. We're looking at where it is right now. The market did not make a retracement, so we're looking at a short position. We may see that we'll see a little bit of a retracement right around the 1.21 area, and 1.2155 area. But the market ends up dropping down from there. Then after that, I will look at being able to buy it. Until then, I'm not looking at being able to do much of anything on this overall pair. Really and truthfully, there's no reason to at this particular point in time because it's not going to give you that much value to be able to get into for us right now. If it falls down and you can get it back at the 1.20 area, somewhere around there, because the market is in a daily sell zone, you might be able to do something. But for right now, not paying attention to that pair. U.S. Swiss franc. We talked about this pair and we said that if the market ended up hitting 90, you'll want to look at possibly looking at being able to buy if the market held up. Well, what happened was that the market did not hold up. So what are we looking at right now? We're looking at sellable positions to be able to get in. Currently, right now, the market has moved 68 pips on one move and about, matter of fact, let's do this. Since breaking the support, the market has moved 85 pips. Now, the market average is right around 59 pips for its overall movement, but we're in a push zone. So you should see that the market should start to look for being able to sell. Now, this is considered to be a breakout. You had the retest already. The retest actually happened on the 2 hour, and it was a very slight retest. If you look at that, you see here goes your breakout. There goes your retest. Quite frankly, if you didn't catch it yesterday, when the market hit 90 right here and then started to push down, then quite frankly, you missed out on that overall position. So what does this mean? From a 2 hour perspective, is there a position to be able to get into? Well, let's take a look at it real quick and let's see if there is, hypothetically. There goes the consolidation, there goes the break, went all the way up to here. The field will probably end up being right around this position right here. So 2 hour D extension has been hit. So what we should see from this overall move is that we may get a little bit of a retracement. If we get a little bit of a retracement, especially if it starts to move back up to 90, then I will look at being able to sell in this position once it ends up getting closer to be able to fall down a little bit more. The overall D extension that I will look at being able to sell to at this particular point would be the daily, which would be right around the 86.50. Well, I'm sorry, the weekly, which would be the 86.56 area or 86.60 for the overall position. Right now, the market is in the buy zone, so I wouldn't look at being able to trade it now. But if there is a position to be able to get into, that would be the overall number overall. So U.S. Swiss franc is off the table. Take a look at the U.S. CAD. U.S. CAD, we took a look at trying to buy on this overall pair, got stopped out on the move because we tried to buy it up based off of support resistance and based off of oil. Oil has proven to be able to push bullish, and the market has basically been gravitating towards the downside. What are we looking at this from a 2 hour perspective? 2 hour, are we in the sell zone? No, we're not. But we're very close to being able to hit the D extension. The D extension's at 1.28883. We can see that this market has went and it's almost about to hit that overall position. So we are fully in a 2 hour R3 position. So from right here to right here. So the question is, do we have a overall take profit location that we can be able to get out at? Last samurai, what's going on? Hope everything's going well. If we're looking at this overall position on U.S. Canadian, currently right now we are about 42 pips away. For a scalp trade, I don't think that I'm necessarily looking at being able to get in. Obviously, if you want to, you'll place it directly up past the overall B and the initial swing high from the overall position. The market is at 56% on the overall swing. I don't necessarily like that either. It's 20 for 40, so it is a 1 to 2, but I like to be able to get into any trade that gives me a 1 to 2.3 ratio. I do that because of slippage and everything else like that. So I'm going to stay away from this pair. If it gives me a little bit more of a higher price, then I may look at it. So if it bounces back up to the B or bounces back up to this overall support area right here, let me change that color up. If it goes back to the support area right around here, in which it's already done rejected off, you could look at being able to sell it. Right now, I just don't like that position. From a scalping position, I think that you can get better plays on indices markets right now than being able to do U.S. Canadian, at least right now. Let's take a look at Australian dollar, United States dollar. Market is moving towards the D extension. We end up having another breakout retest move from right here. This market has started to be able to push. The daily is not in the sell zone as of yet, but it's slowly starting to move up. This is probably a position that I'll swing my monthly and daily entry. Just check on your analysis. All right. Thank you. I appreciate that. Australian dollar, United States dollar. We look at this from a weekly perspective. This market from a weekly perspective is moving up to a weekly R1. It still hasn't proved to where it's going to end up breaking out to the downside. Now, obviously, going into probably 2021, you'll probably see that this market will start to move down and ultimately Ultimately, we're trying to see how far the market will end up moving once the U.S. dollar starts to gain control. I was surprised because YouTube stream not normally know very much. No, I get that. I understand that. I've been trading on YouTube for, I want to say, probably 2 months strong now. But typically I do everything on Facebook, and I do classes and stuff like that all the time, but not many as people have been paying attention to what I've been doing on YouTube. Don't know why, but it is what it is. I still try to push out quality content though. Australian dollar is broken a new high, so we're still looking for obviously the fractal high has been broken, so obviously it's more. We're going to end up seeing more of an Australian dollar push. The daily extension from the Australian dollar is at 77.25. Currently, right now, we're at 74.24, so you're still talking about a little bit less than 300 pips for the movement toward the upside. If we're looking at this, yeah, buddy, they don't know the good from the bad on YouTube. Well, I mean, everybody has their own trading strategy. I know what works for me may not work for everyone else, but obviously, I'm a Fibonacci trader, so. This used my same process all over and over again. I've been doing it for the last 5 years, and finally done got to a point where I feel like I've done somewhat perfected it. So we're getting there. I see market is at the 127, went down to here. We're still in the push zone. We expect that the market is going to go to 75.47 first. Market has not fully gotten into the sell zone yet, but obviously the only thing that I would look at is if we can be able to get a 2-hour low price. Currently the market right now has made a new higher high. As long as the market's at 64%, and as long as we don't end up getting a counter trend line break, I'm going to stay out of this market. I would like to be able to get in if we can be able to get the market to be able to fall down a little bit more. This is more of a beggars can't be choosers on this one. Either you're going to make the decision to be able to get in and know that you're going to end up having a pretty bad stop loss to be able to get in, or what you're going to end up doing from this overall position, because, well, here it is right here. That's the reason why. 74.38 is the overall 2-hour D extension. The daily D extension is at 75. So going into non-farm payroll tomorrow and everything else like that, we may end up getting a little bit of a drop to be able to get back in tomorrow. So once again, I'm going to remain out of this trade for this mark because of that reason alone. That is the 2-hour D extension. 2-hour D extension has already been hit. We should expect that the market is going to end up doing a little bit of a retracement. Once that retracement happens, then after that, you can look at being able to buy once the market ends up falling down a little bit lower. Look for the market to be able to fall down to a support range of probably somewhere around here. So right around the 74 range. If that does happen, then you get a better value for us being able to get in. If we look at that previously, we can see that has been previous. That has been a previous high. So I'm not necessarily going to end up calling it a pivot, but 74 is a overall, obviously is a round number. So typically you end up looking at more hedge fund managers and money managers try to get into whole numbers as well. So I'll wait for that to be able to happen. But consolidation is broken. The market is fully moving towards the bull's way. Now we got one trade to be able to take a look at. I want to take a look at the New Zealand dollar Japanese yen. We got into that trade last week. Ended up making a pretty good penny off of that move. Currently, right now, we do not hold any positions, but we are looking at being able to buy up once this market starts to get back into the buy zone. Currently, right now, we got out because the market went to 73.25, broke out of that overall area. What has happened since then is that the market ended up testing this area, breaking out. All we're looking for right now is the overall retest. Once we end up getting that retest, typically the market is in the sell zone. So we're going to look at 7 to 11 business days for its overall movement to the downside. And then after that, we may end up having an opportunity to be able to get in for that overall spot. So essentially what I'm waiting for is this. Geez, stop touching that one. Essentially, what I'm waiting for is that I want the market to be able to fall down at least 68 pips if we can be able to get that. If that does happen, then I think we'll be in a good position to be able to buy, at least long term. back up to the overall D extension that we expect the market to be able to go to. So I'm going to keep on looking at this periodically. Obviously because we're in a push zone, the market may move up faster than the stochastic actually hitting. So you have to keep that in mind. The extension's at 76.96, and I think that'll be a good position to be able to get it out of. All right, so that was our last trade for today. So if you're interested in being able to hop in and be able to talk to me about what we end up doing from an everyday basis, all you got to do is go to cartercowcapital.com/start here. Sign up for one of our free webinars that we end up having. Remember, December 14th to December 18th, we're going to end up having another Believe in Yourself Bootcamp. That's going to end up being our December edition. Remember, we typically do it at the end of the month, but because Christmas is going to end up doing that last week, and obviously we're not going to end up doing anything the week the last week before the year end, we want to be able to make sure that everyone can be able to have an opportunity to be able to hop into the boot camp from there. So take your time, be able to take your time to be able to get into that. We are interested in being able to have everyone in. Quite frankly, hopefully today ends up going very well. Currently right now, we're still up $1,244 for its overall movements, and that's off of indices trading and being able to do a little bit off of gold. I'm hoping that gold ends up dropping down a little bit more so we can be able to get back in and be able to recover on some of our overall positions. But like always, we're going to keep on trading until we end up getting into the positive and keep on going from there. But like always, believe in yourself, change will end up coming, and always plan your trade your plan. Everyone,